This is the MTPredictor weekly market update for November 25th. Well, we've been off for a few days there for the Thanksgiving holiday here in the U.S. I hope you all enjoyed the time off. But the markets were open to some degree, not on the Thanksgiving holiday, but just before and after. So let's kind of see what's happened. We're going back to our S&P on the daily chart here. Just review where we've been. We went wave 5 up. We expected once we go wave 5 up that we should get a correction back to the wave 4 DP at a minimum. Right, you see we did correct back to that wave 4 DP. And subsequently what unfolded here, if we look at the near the end of the chart here, is we had a nice 5-wave pattern down here into our maximum wave 5 target. We got a reversal candle here, or a blue buyers candle, telling us the buyers are now overcoming the sellers. And just as we had this 5-wave pattern up here and we expected a correction back to this wave 4 DP, in the other direction we had the 5-wave pattern down. So again, we expect a correction back to this wave 4 DP, which is going to be just above 1440. Where we left it before the holidays here, we talked about the tendency for the market to rally into the end of the year, into the holiday, so I posed the question anyway: higher into the holidays or market crash? In other words, this was a critical area here, because if they took this area out to the downside, then we'd be looking below 1310 in the S&P, which is basically the DP off of the bottom of the wave 1 here. So in other words, if they take this area out to the downside, the tendency is they erase the whole 5-wave pattern up to the downside. Alright, so this held. We've begun to correct. You see the market rallied nicely. We had some nice outside gaps to the upside on the opens the last few trading days in the S&P, which the market tends to trend on those days, and we've seen that up to this around 1405 area. And like I said, above 14040 would be the kind of year-end target, if you will. At least that would complete the higher into the holidays concept there. And then this again will be a critical area, because if this area holds as resistance, then the trend, which was down here, should continue back down. And what's setting up, and if this area gets taken out to the upside, then obviously we should test the highs there. But on the weekly chart, we can see a little bigger picture. Here's our 5-wave pattern up. Tendency is we're going to correct back to the wave 4 DP. Alright, so this is still out there. So when we get this rally into the holidays, what this essentially then becomes is a potential wave 1 on the weekly chart heading into a potential wave 2. So long as they don't take out the wave 5, we could have a potential wave 2 here, and then after the new year set up potentially at the big wave 3 down, which would be potentially greater than 5% into that 5 to 20% correction mode, or crash mode, if you will. We'll see. Again, we had that Hindenburg omen that was confirmed. I think it was last week, on the Monday of last week or the week before. That just telling us that the market is unhealthy. The internals of the NYSE are unhealthy, and typically you get either a greater number of new highs or new lows in any market at a given time. But when you get a mixture of equal number, let's say, of new highs and new lows at the same time, it's telling you there's that divergence in there, and the market is unhealthy. And we see that divergence happen. Well, we've seen it before every crash of the last 40 years. But just because you get that divergence doesn't mean there's going to be a crash, but there hasn't been a crash without being preceded by that divergence. So they call it the Hindenburg omen. You can Google it and research it and so forth. But it just kind of gives you a heads up. So in conjunction with the patterns here, just be aware, even though we expect that market may rally into the holidays and finish off the rest of the rally into the holidays, if at that point we haven't exceeded this wave 5 high, then that could be a potential wave 2 on the weekly chart heading in then for the bigger move down, which would be the wave 3 down. Alright, so we'll watch for that. And let's move on to gold here. Let me clear this off for a second here. So gold, you see we had on the weekly chart here, the TS1 buy signal. It basically reached that weekly target there, and you see the pullback back to this red line, which is the 50 period moving average. Found support there, big high volume spike there, telling us that professional buying may be stepping in there, confirmed by the blue buyers candle, telling us buyers are now overcoming sellers there. We got a nice move off of that 50 period. Again, you see these prior swing highs have not been taken out yet. These, we need to see a close above these areas in gold. You can see the prior high back there in order to potentially test that high. So that hasn't happened yet. So too, if we look at, well, let's look at the daily chart here and follow our trade from the daily chart, the TS4 buy signal here, which was your little ABC correction. Again, preceded by the high volume spike in here. Here's the target for that. Would just take out that prior swing high there, which was a high of 1798.10 there in gold. That target is at 1813.80 on the daily chart. We are in some resistance. If I take a decision point off of this, where we close just above that area. So we'll see if that high gets taken out. We should get some more continuation on that. So we got to see this area get taken out here. And if they can, then we may see a run to that 1800 plus level there. Silver. Where's my silver here? Okay, same situation on the daily chart. There's your buy signal here. Again, high volume spike, telling us it's potential professional buying stepping in. We talked about that before. Here's its decision point off the wave B swing. It closed above that. That high was taken out, pointing to more upside. You see the target there around 36 in silver. And so we'll see if we get that kind of run into the run up into the end of the year there on that. And just take a peek at the weekly chart. So I got to check which day I was able to purchase silver. It was in here somewhere, and this was this is building a longer-term position. This is not day trading. So here's our pullback to the 50 period on silver on the weekly chart. That's where it found the support. You see the high volume spike there, this red line there, telling us that potentially professional buyers stepping in there, followed by our blue buyers candle telling us that buyers in fact were overcoming the sellers at this support area. And now we'll see again this pattern of lower highs. All right, even though we took out the on the break there, here was basically where the daily break was and the weekly break. We failed to take out that prior high there. This high was $37.75, call it that $38 area. All right, so we need to see that get taken out, otherwise, and we've got this swing high here now also as a lower, so we've got a succession of lower highs here. So we need to see this area get taken out, make a new high, and that may reverse things. If they fail to do that, then we could just end up rolling over again once this plays out here to the upside. All right, so we want to watch that from the weekly standpoint. And well, let's just take a look at the euro. Again, the euro, this is the weekly chart, but went wave 5 down there. Here's your decision point off the wave 4. Okay, above 13600 there. We got a little bit of, we had some support come in here from the daily chart, we'll see, and began to move higher off of that, and you'll see the dollar was selling off at the same time. Let's just go to the daily chart here. So this TS3, this sell signal finished out, hit the target, found that support. Here's your decision point off of these little wave B1 here. It came into that overlapping support area and began to rally off of that. And in juxtaposition to that is your dollar. Let's just go to the weekly chart. Well, you see the daily chart, as euro rallied, the dollar fell off here. But on the weekly chart, again, here's our major bottom, and there is the target, still 85.33 area. Here's the support that the dollar was working off of here, and that's where that rally came in, where the euro was selling off, and then we tailed off last week in the dollar, and we'll see how things kind of pick back up as the holidays out of the way, at least Thanksgiving's out of the way, and see what kind of direction we get here. And then let's just look at oil one last thing, see if we can squeeze in oil here. Again, on the weekly chart of oil, this this $80 kind of support level that we've seen for quite a period of time now, it tends to rally around that $80 up to that $100 to $110 level. You can see once it gets beyond 110, it really pulls back inside and begins to correct. So there's a buy signal here. It's on a red STF, so it's not a standard trade set up there, but it's off a low from that low there of $78.63. So it's a little, in terms of Elliott wave, a little wave 2 or B here. We can put the analysis on just to see that the target there would be right at about $100. So it's possible we can rally back to that $100 level here, though we do have a little bit of room down to that $80 level here. You can see the prior supports there, all in that area. So we're in close to an area where we expect oil to rally. I wouldn't be surprised if it does, maybe roll over again, one last move down into that $80 level, and then get the rally. We'll see. But we do have a pattern here where it's saying we could rally from here back to the $100 level. So we'll see what happens there. All right, so we'll leave it there, and we'll see how this week plays out as everybody kind of gets back after the holiday here, and we'll take a look at the markets again and see what progress we've made next week.